emerging markets. Before we go into our slides, I would like you to watch this video first about emerging market. I'm going to play it. Please, you can read the transcript on the right side. I hope you can see the YouTube video now. I'm going to play the video, and if you cannot listen to the audio, please let me know, yeah?
India, Brazil, and Russia. They're all classified as emerging markets.
It's a term that originated in the 1980s and has stuck around since then. Two of the most important reasons why? Well, these countries are crucial when it comes to driving global economic growth. And their financial markets can be gold mines for investors, especially those with an appetite for higher risks.
Sorry, I will play it from the beginning. We'll play it again, okay?
Asia have in common with countries like India, Brazil, and Russia. They're all classified as emerging markets.
It's a term that originated in the 1980s and has stuck around since then. Two of the most important reasons why? Well, these countries are crucial when it comes to driving global economic growth. And their financial markets can be gold mines for investors, especially those with an appetite for higher risks.
So, what is an emerging market today, and why do investors have such a love-hate relationship with them?
The term emerging markets was coined by World Bank employee Antoine van Atmaal. The finance arm of the World Bank wanted to get more foreign investment into third world countries, but didn't think the term third world really inspired investors. To make it sound more attractive, Van Atmaal coined the term emerging markets.
But if you want a definitive list of emerging markets, good luck. The list varies depending on who you ask.
The IMF classifies 96 countries as emerging. It uses criteria such as how much citizens of that country earn, how diverse the country's exports are, and how sophisticated its financial system is. That's one measure, but investment research firm MSCI, which creates stock indexes, classifies 24 countries as emerging markets. Okay, but what's an index? Essentially, it's a list of stocks that measure certain features. For example, if you want to look at how the biggest US companies are doing, you could look at the Dow Jones Industrial Average, which covers 30 household names. The MSCI is known for its Emerging Markets Index, which shows us how emerging countries like Brazil, China, and Turkey are doing. Unlike the IMF, the MSCI uses how investable a country's stock market is to determine whether it's an emerging market. That's important because this influences how much foreign investment a country can get. You may be wondering how such a diverse group of countries could possibly be grouped together.
Despite their many differences, there are a few characteristics that they do tend to have in common.
Let's take a look at the first one. The term emerging markets was initially used for developing countries, which meant that the average person living there tends to earn less than someone in a developed country. Economists call this a lower income per capita. But that's not always true today. Some countries like the United Arab Emirates and South Korea are considered emerging markets, but they have higher income per capita than some developed countries like Spain and Portugal.
An investor's goal is to make money. For that, you need growth. And emerging markets are known to do just that, rapidly.
Fast growth is our second characteristic. One report found that 1 out of every 4 emerging economies outperformed its peers and developed countries. Of these 18 outperformers, 7 exceeded annual per capita GDP growth of 3.5% for a 50-year period. They include China, South Korea, and Indonesia. The other 11, which include India, Ethiopia, and Cambodia, have enjoyed more recent gains, growing at about 5% or higher over the past 20 years. That's 3.5 percentage points above the US, and enough to lift themselves into a new income bracket for countries.
That growth comes with a lot of risk. And that brings us to our next characteristic, high volatility.
And if you need an example of volatility, just look at this. The MSCI index, which shows total returns, shows emerging markets had been doing pretty well until January 2018, when things began to sour.
We've seen their currencies fall to historic lows against the US dollar. That's bad news for countries trying to pay off their debts.
It's a problem because a lot of that debt is held in foreign currencies, particularly in the strengthening US dollar. That makes paying off debts an uphill battle. Not ideal when emerging markets have seen their total debt rise from $21 trillion in 2007 to $63 trillion in 2017. Emerging markets crises are worrying because they affect multiple countries and tend to work in a vicious cycle. First, the currency falls rapidly. Countries then struggle to raise funds due to their less mature capital markets, and investors flee. This affects the country's assets and currency, and can sometimes damage the country's banking system and even the economy.
It's important to note that an emerging market status can come and go.
That could mean a step up as a developed nation, or a step back as a frontier nation. Despite all the uncertainty, one thing is for sure. Investors will continue to watch emerging markets closely as the countries continue to expand their role in the global economy.
Hi everyone, it's Sinan. Thanks for watching. If you want to check out more of our videos, click here. Feel free to leave any suggestions for future videos in the comment section. That's all for now. See you next time.
Hey. Okay. So that's about an introduction about emerging markets. One thing that we are going to learn today. So emerging markets is very important for companies who are going to join the international markets. Okay, because as mentioned in this video, it mentioned that how an investor can get a lot of profit, but also at the same time, according to the situation at that country, at the host country, can also lose a lot of money. Okay, so there are things that need to be considered when you are going to invest in an emerging country. Okay. Okay, so this is what we are going to learn today. Okay, we are going to understand the emerging market in terms of their economy. Okay, in terms of advanced economies, developing economies, and emerging markets. What are the difference between these? Know what makes emerging markets attractive for international business. Learn how to assess the true potential of emerging markets. Evaluate the risks and challenges of emerging markets. Learn the success strategies for emerging markets and understand the corporate social responsibility, sustainability, and the crisis of global poverty. Basically, in the video we have already done until here. So basically, we can just end our class today because we have already, seen all those the important points about emerging markets in the video. Okay, so there are many companies, about 100 companies from emerging markets are poised to become important 21st century multinationals. Okay, so there are a lot of countries such as from Brazil, the Embraer, Sadia, and Perdiago. Sadia is actually a very big poultry company. I know about Sadia when I was in Japan, studying in Japan. That was 1996 to 2000. That was 1996 was the first year I was in Japan as a student. So I learned about Sadia because Sadia supplied halal chicken to Japan. At that time, there were very little option on halal food, and the only option that we had at that time for halal chicken, halal frozen chicken, was from Sadia. So it's a huge company, also natural. Okay, In Mexico, it's American Movil, Grupo Modelo. India, Ranbaxy, Infosys, Tata T, Wipro. Okay, Wipro is a huge company. Infosys, Tata T also. China, Galance, Haier, Chunlan Group, Lenovo, Pearl River Piano. Do you know all these companies? Haier is quite popular in Malaysia also. Haier, Lenovo. What company is this? What company is Galance? Maybe you can put in the chat if you know. Galance is what? I know Haier is a electronic, home appliances company. Lenovo is a PC. They bought from IBM. What does Chunlan Group? What is their core business? I think Pearl River Piano is making piano, right? How about Wine Galance and Chunlan Group? Anybody knows? I cannot hear you. Are you speaking? Do you know what Galance company does?
I have never heard of this brand. I just know here, hair and Lenovo.
Oh, you also like me, eh? Only know about Haier and Lenovo.
Yeah.
I see. Okay. I'm not sure about now because well, this is 2020 edition, so this should be the latest. But maybe only Haier and Lenovo that had really made their existence or appearance worldwide maybe much better among other companies.
Okay.
Turkey, they have Koç Holding, Vestel, and Siscam. Okay, so new global challenges benefit from emerging markets. Why? Okay, because as also mentioned in the video, emerging markets, they have very high potential to grow. They can grow very rapidly, and usually they are the population is very large, which means that they still have cheap labor cost, and they also have huge market. So the economy has potential to grow very rapidly in the years.
Excuse me, Miss.
Yes.
How about 5G technology? Is there also an emerging market?
Sorry?
5G, you know Huawei? 5G technology. Is
Can
there
you
also emerging market? I can type for you.
5G? Oh, okay.
Because the cost, I think, is high, but it looks like an emerging market.
That is an emerging sector, yes. These are company, okay? These are companies from the emerging markets. Emerging markets meaning emerging countries. In this case, emerging markets mean emerging countries. 5G is an emerging sector. It's an emerging technology sector. Okay, so it's a different classification. And yes, it is emerging because it is a new technology to come. But emerging technology meaning to say it's a new technology to come, which has a very high potential, to have a widespread usage around the world. It's like maybe like 10 years back, maybe around, not yet 10 years, maybe 20 years back, around the year 2000, social media was an emerging technology sector. Okay, so the social network, So social network was an emerging technology sector at the time. So at the point of that year 2000, it is still new, and it has a high potential to be used widely around the world. And 20 years after that, which is now 2020, everybody has their social media account, almost everybody. So now it means that the growth between the year 2000 until 2020, it has reached, it has reached a significant growth. So emerging markets that we are talking about today is about the emerging countries in terms of economy. So countries like Brazil, Mexico, India, China, Turkey, even Malaysia. 20 years back, in the 1980s, that is about like 40 years back, in the 1980s, the economy of China was still closed, a very close economy. Okay. After that, it has been open, and then other countries have realized, or other people have realized, that China has a very huge potential to emerge as a new market. Okay, so that is what we means when we talk about emerging markets. And now you see the growth of China. It has already surpassed Japan. Okay, it has already surpassed the growth of developed markets or developed nations. Okay. Okay, so why emerging markets are very attractive to the challenges or to new investors? It's because it has growing markets. Okay, and the market in the country is very large. So if a company from outside, they were to target a market in, for example, in China even, okay, or in India, because the population is very high, so they can target in terms of the economies of scale. They can sell at a very low price, but it can be consumed by so many people. Okay. Another important point, okay, that attracts investors is the low cost labor. Okay, and also it can become a training ground for competing with global incumbents. It's complex operating environments which produce some very capable firms. Yes? Do you have a question? No? Okay.
No.
All right. Okay. So these are some of the attractive points about emerging markets that is very attractive to investors or the new global challenges. So what are the key concepts that is related to
Can I ask one question, Miss?
Yeah, yes.
So it's like economic entity, right?
Entity.
It's not a market for some sector or some specialized sector. It's like the whole country economy and
Yes,
entity.
yes. It's the whole country. We are talking about the whole country. So we are not only talking about a specific sector like 5G, but everything that has to do with the economy of that country. Okay, so for example, let's see the advanced, what we call as an advanced economy. Okay, so because now the key concepts are about the advanced economies, the developing economies, and also the emerging market economies. Okay, so advanced market economies are countries like Australia, Canada, Japan, United States, and the countries at Western Europe. Western Europe like UK, France, Holland, that side. Okay, so these advanced economies, they have they are post-industrial countries. Post-industrial means once in their history they were an industrial country. Okay, now they don't really focus on industries. or manufacturing. Okay, in the past they did a lot of manufacturing, they did a lot of industry. Okay, uh, and they have high per capita income. Okay, people in the country have high salary. Okay, competitive industries, they are now going in, already doing competitive industries like financial, high technology, creativity, things that have to do with creativity and innovation. And they also have developed commercial infrastructure. Okay, so if you travel in these countries, it is easy for you because the infrastructure is there. You can go from place to place with ease. It is easy for you to get information. It is easy for you to get, food, and also uh, the whatever facilities that you need. Okay, so these are what we call as the advanced economies, which means the advanced country. Okay, and then there's a second one, which is the developing economy. Okay, developing economies are the low income countries which has limited industrialization and also stagnant economy. Okay, so for example, Bangladesh, Bolivia, Zaire. Okay, Bolivia and Zaire is in Africa. Sorry, Zaire is in Africa. Bolivia is in um, the South America. Okay, so these countries, they are low income countries. And then there's what we call as the emerging market economy. So actually in hierarchy, let me see if we have, no, we don't have. Okay, advanced economy, the economists have identified the advanced economy as the one at the top. Okay, developing economies as the ones at not in the middle, but actually they are lower, okay, at the bottom. Emerging market economies, those companies who were at the bottom but now going into the middle position, okay, in the rank. Okay, so emerging market economies were the former developing economy. Okay, in the past they were just like Bangladesh, like Bolivia, like Zaire, but now they are moving towards a better economy, better place, okay, better rank. They are now achieving substantial industrialization, modernization, and economic growth. Okay, so these countries that we are talking about today, for example, Indonesia, Mexico, Poland, Turkey, China was also there, um, and Malaysia was also there. If we look in the video, okay, and as mentioned at the early part of the video, the the reporter said that what do you mean by emerging economy? Okay, emerging market economy. Emerging market economy can be defined from different perspective. Okay, if you ask the International Monetary Fund, then the definition is different. If you ask people from the stock market, then the definition is also different. But basically, there are about, uh, the country that were grouped under emerging market economies were about the same. Okay. So, okay, this is what we call countries. BRIC countries falls under emerging market, and they are huge. They have very high potential. Okay, they are Brazil, Russia, India, and also China. So BRIC, because these countries, they have a very high population. Okay, and their economy is also have very high potential to grow, to have substantial growth. Sorry. Okay. So let's see the key difference among the three major country groups. Advanced economies, for example, Canada, France, Japan, UK. The number of countries only about 35. Their population compared to the world population is about 13%. Their per capita income average is $44,400, okay, per year. Their approximate share of world GDP is about 45%. The developing economies at the lower end, okay. Still, there are so many countries that falls under developing economies, okay. Their population is huge, sizable, okay, sizable, about 22%. But their per capita income in average is only 3,650 per year. Okay, so very, very low income per capita. Okay, so per year means per month only about $304, okay, per month average. And their approximate share of world GDP only 5%, okay, because their per capita is very low. Now, emerging markets, 30 countries, 55% of population is in the emerging market, so very high, which means that they are